Hi and welcome again to TCM Education. Another day, another power list. This list is for June the 26th. As you can see, this is highly unusual. Over 5 million shares, price range above $10 and intraday range above 10%. No shorts or no losers showing in the list. So we have all longs. Being that I did my research before, if I lower my threshold volume from 5 million to 4 million, there will be one stock, one loser in the list. But we're not going to do it. We're going to stick to our prerequisites and standards. And our standards are, as you can see, highly important, and the threshold of 5 million is important because if we lower it to 4, then we lower it to 3, then we're going to have 90 stocks in this list. It will take us a month to analyze, and you know where it's going. So we need the best of the best, and if the list is 12 shares, 12 stocks instead of 35, it's better, because we have here what we want as day traders: liquidity, price, and more important than anything, this is our go-to indicator slash factor, the range percentage. The range percentage makes this list what it is: a very good, a very concentrated list of winners that have attached to the winning column, which is sometimes it doesn't necessarily need to be 12%, and we have a stock here that's up 1.92% at the bottom, NKTR Therapeutics. You can see it here, NKTR Therapeutics up after being up 150%, 40%. It's up only 2%, and we'll see if it fits the standard of trading that we require from our list. But let's start at the top. We're not going to go through CYN because that one requires a different total different video. Let's go with number 2 and number 3. Maybe I will be able to condense two stocks in one video. Most likely I won't, but I will try, because we are doing the same routine over and over every morning. The idea here is to post 3 to 4 super important trades that show the ability of day trading to take advantage of them, show clear entry points, show the risk, show how we approach the trade, and show that this process is repeatable. Needs learning, of course, needs practice, but it's repeatable, and carries alongside with it not only educational value, but real life. Those are real life trades. It's not like an invention that will apply somewhere in the future. No, those are trades from yesterday, and the trades that we analyzed yesterday are trades from the day before, and we're trying to do those basically trades live. But being that YouTube is YouTube, and we are limited here at TCM to only 15 minutes of videos, and we can't even go live. I mean, the videos are recorded live, but the limit is 15 minutes. Okay, so the limitations. Once we're gonna be able to go live somewhere, who knows when, maybe tomorrow, maybe in 2 years. I really can't, I don't have an answer for that. Okay, so I'm spending too much time. So let's go to KWE. That's KWE. We analyzed it in the morning yesterday, I think. Yeah, it was in the morning yesterday. So KWE, I don't even remember the sector of the company, nothing. I'm just looking at the chart. And remember, guys, we talked about how important it is to find the very few entry points where those high movers deliver. Okay, so you take a look at this stock and tell me if 950 or 10 delivered or not. Now 950, it's not even we don't recognize the stock before 950. So actually I'm wrong, because it was over 11. So it hit our watch list at one point, then came off the watch list, and then came back into the watch list. So the threshold here was a bit challenging. It doesn't matter. This is obviously something that will be an issue for us. If I lower it from $10 to $9, then the next time a stock will be at 9 and 850, and then we'll go to 8, and it's endless. So this is part of the part of the scheme. So maybe this one is indeed something that didn't show at the right time, but I just saw it. It's not like I came up with the KWE out of nowhere. I just saw it on our daily power list. Okay, so the entries are clear as I drew them yesterday. Either 950 with a $9 stop loss, or a 10 with a 950 stop loss. Now there are other potential entries, like the breakout over the highs of the day, which was 1150. But you can see already that the order in the trade starts to unravel. So if in the morning we have round number entries, this triangle, hold on a second, my mistake. This triangle moves with higher lows into the resistance, which are we can observe them. If I move to the 1 minute chart, you know what? Let me try and do it, and then it will be easier to observe. Keep in mind it's the morning session. So that's the 1 minute chart. Okay. So that's the 1 minute chart of KWE. Now you can see the entries 950. Let me point them. It will take some time, so I won't be able to do another video in the 15-minute threshold. Okay, I stopped obviously the video, so I won't spend time on drawing these entries. At 950 and at 10, you can see that the entry at 10, which is obviously the most important entry, it basically completes this virtual triangle. I mean, it's not perfect, but it can be observed if you have a keen eye, and you know always for a small cap that 10 is always a super important number to cross. And again, in this case, the volatility, this is madness what's going on with this stock, which was worth 5 at the close the day prior, and managed to climb to infinity. You'll see the numbers. Sorry, okay, my mistake. It's not it's not CYN. So my mistake. It's we're talking about KW. I'm still under the impression of CYN, but again, we'll do another video about CYN later on today. So again, the entries here are 950 or 10. Now you don't see them. Okay, you don't see them, you miss them. What's next? The next entry, the next possible entry, I think, is this breakout over the highs. Let's call it 1150. I always like the round numbers. 1160 is meaningless. So 1150. Okay, so let's say you enter at 1150. Okay, what is the stop loss? You don't have a clear stop loss. Maybe $1 below. So instead of entering with a 1% risk that we normally like, here you have a 10% risk. So it's 1,000% more of risk. It's 1,000% more risk. So the risk factor increases by 10, a factor of 10. So instead of risking 10 cents, it's $1. Okay. Now, obviously, the entry at 10 also carries 50 cents of risk, but that's a factor of 5 instead of a factor of 10. So if you enter with a $10,000 position, you're risking $1,000 on the late entry and you're risking only 500 on the early entry. So which entry is best? Obviously the best entry is the one that carries less risk and is an early entry, because if it's an early entry, it has more time to develop. And again, timing is of essence. Now, is it possible that the trade will start developing at 3:45 and deliver 5% into the last 15 minutes? It's possible. The chances for that are 0. Okay, so it's possible. On paper, everything is possible in trading. Good luck finding a trade at late in the day or very late in the day that's going to deliver 5% in whatever time is left. So highly unlikely. It can happen, but it's highly unlikely to happen. So we're not looking for those type of scenarios that are, walking backwards on the moon. No way. Okay, so that's all about the KWE. Now, if you don't take those scenarios, early in the morning or the late entry at 11:50 with a big stop loss, what's going on next? You're going to lose money anywhere you enter. Because the volatility turns unbearable, the stock moves up and down really, really aggressive. Then it tops at over 14, drops to almost 11, comes back up. There are halts. You can see after each big sell-off, there is a halt. Those are the dots here. It means that it's been halted for 5 minutes and another 5 minutes, and then it turns absolutely impossible to trade. So that's the story of KWE. If you don't act early and aggressively, okay, so this trade goes away. Now, was there another entry? There was very early in the morning, here again at 9:50. And then the stock moved to 11:50, came back to under 9:50 at one point. Yeah, came back actually down to 9. Again, the volatility on those double-digit or high double-digit movers is uncontrollable. Most of those stocks will likely fail eventually. Why is that? Again, there is no written rule. A stock that has absolutely no institutional investors can be a great winner, and the other way around. But we want to see, when we look at shareholders, and normally I go to Yahoo Finance, but this is basically where we want to look. Okay, if you have the right platform, you want to look here at major holders. And if the major holders are others, and the others in this case are worth 93% of shares, meaning there are no major holders, there are no institutional traders, this stock most likely, again, we are trading the chart, so we're not guessing, but doesn't have the backbone of institutional investors to succeed, because those are the only guys that are looking long term. No day trader is gonna, or swing trader is gonna look at KWE and say, okay, I want to sell it at $50 in 5 years. No, we're gonna sell it at $1 profit, 10% profit in 2 minutes if possible. Okay, guys, sorry that it took so much time, but I hope it was illuminating enough. If we want to summarize what we've seen here, you don't act early. You might as well not act at all, because then the risks grow, the momentum dies, the chances of making money diminish, and everything is has a better chance of losing than winning. Thanks a lot for being with us with this video. Please share it with your friends, those who trade, and we'll see you in our next video.